Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session morning outlook. And I'll start with the North American markets, where the dollar slumped versus major rivals on Friday, with the euro rising to its highest level versus the US currency in 3 weeks after official US data showed the rate of jobs growth decelerated last month to its lowest level since late 2010. The NFP came out 126,000 worse than expected at 38,000. The unemployment rate, however, it did come out better than expected at 4.7%, which is 0.2% better. Labor force participation rate, 0.2% less than previous. The trade balance is $3.9 billion better than expected. The market services PMI, 0.1 points better than expected at 51.3. Market PMI composite, 0.1 points higher than previous. ISM non-manufacturing PMI, 2.6 worse than expected at 52.9. And the factory orders month on month were as expected at 1.9%. Charles Evans said the timing of hike not the main issue. It could be June, July, or September. However, 2 hikes this year are appropriate, and between 0.75 to 1% should be the interest rate towards the year's end. The Nasdaq was 24 points down. The Dixie moved down severely to 94.23 from 95.53. USD CAD 160 pips down Friday. USD Swiss franc 150 pips down. USD JPY 240 pips down. The dollar suffered majorly after the NFP. Today's events, we have Tier 2 events, Labor Market Conditions Index, and most importantly, Fed's Yellen Speech, where we'll be looking to hear further details about what's going on. The EU markets, the euro gained significantly on Friday due to the bad NFP data. The move on the euro USD was 210 pips up. The major events for the euro this week are the targeted LTRO data, which is coming today, and the gross domestic product data tomorrow. The ECB seems to be currently waiting out to see how the events of the Brexit and Fed rate hike will turn out. Last week, the bank forecasted only a slight increase to inflation expectations for this year and no changes to expectations for 2017 and 2018. Alright, on to the UK markets. Despite the horrible NFP data from Friday, the sterling's upward momentum was put to a screeching halt as polling data from the weekend showed that the Leave campaign in the Brexit is gaining momentum. The sterling started the week with a major slide to the downside, opening with gaps against many of its major rivals. The drop was as much as 1.1% versus the dollar and is trading at a 3-week low now. FTSE 100 lost 17 points and closed at 62.24 on Friday. The 10-year gilt yields closed at 1.48% on Friday. The GBP versus the dollar, 105 pips up Friday, versus the JPY, 250 pips down, 330 pips range. Against the Australian dollar, 217 pips down, 300 pips range. Against the Canadian dollar, 140 pips down, 180 pips range. Against the New Zealand dollar, 295 pips down on Friday, 365 pips range. So the polls did have a major we have by the end of the week we have production, industrial production month on month and year on year, and the GDP estimate, housing price balance as well. For the Asian and Pacific markets, the Australian dollar snapped a 5-week losing streak, putting in its largest advance in 4 months. The move found fuel in domestic and external news flow. First quarter GDP data figures proved far stronger than expected, pouring cold water on Royal Bank of Australia rate cut bets. Then a deeply disappointing US payrolls print crushed Fed rate hike bets and sent investors scrambling, boosting the Aussie along with other anti-USD alternatives. The week ahead promises continued volatility as the markets are battered with another round of high-profile event risk. In Australia, all eyes are on the monetary policy announcement. The interest rate decision will be on Tuesday, European morning. In China, investors await Wednesday's May exports data. It is expected to show a 4.6% decline from a year earlier, extending April's drop of 1.8%. Commodities, the Baker Hughes oil rig count, it increased by 9 last week to 325, ending 3 straight months of weekly declines, and gold prices surged more than 2% on Friday, its biggest one-day gain in nearly 3 months, as the US dollar plunged after the release of dismal US non-farm payrolls. The gold had a range of $37, it's at $12.42 now. Silver had a range of 47 cents at $16.43 now. Crude oil had $1 range at 49.07 now. And natural gas is trading at $2.43 at the moment with a range of 6 cents. Alright, thank you everyone for the time. That was all for today. I'll see you next time. Goodbye.